All right, traders, welcome to today's end of day as well as the end of week video brought to you by Christian Fromhertz, Tribeca Trade Group, where I'll go over the performance for the week as well as I'll start with today, kind of the theme of the day, and of course everything that we're going over and through here is for information purposes only, not giving out any advice or recommendations, anything like that. So I'm just reading a headline on here. It looks like U.S. automakers, U.S. drops antitrust probe of automakers over emission deal. That just hitting the headlines here. So whenever I talk slow, that's usually because I'm trying to read something on another screen. But in any event, theme of the day: 5 out of 6 Fridays in 2020 have been red. It's just been the situation. Although today gave us a nice little morning. Different, much different than last Friday. Last Friday, price action basically just went down right after the open. Today kind of gave us a little of some momentum. We saw some call activity in a few different names, and you had a chance to kind of do some day trading today. So it was kind of a fun day from where we started the day. But I don't know. Maybe these Friday, like, everybody should just be taking Friday off. Maybe not a bad idea. Maybe hit the slopes, get some skiing in with now that we're in February. But it's something that I've really want to do. But I have a feeling when I start doing that, that's when Fun Fridays will be back. But we'll see. To be continued on that. So I think despite kind of the week ending this way, overall performance was really nice for the week. I'll go over that in just a second. I just wanted to go through today and talk a little bit about some observations that I saw. And again, if you watched yesterday's video, this was something that I talked about for a few minutes in yesterday's video, just talking about how there's no need to kind of push too much in terms of risk taking on these Fridays. The Monday through, we had 4 big up days, so it's the whole situation of reducing risk at the right time and not being excessively greedy into a really strong tape into everything else that's going on in the world right now. So that's the whole thing. So I could talk about some of the option trades for the day. There was Juniper calls, there was Lulu calls, so on and so forth. But really, you really have to be mindful. And I know, like, Twitter and financial Twitter is a big thing these days because it gets everybody, there's a lot of information that you could absorb about option call buying and so forth, and it gets everybody kind of charged up with that stuff. But really, at the end of the day, the option activity can help you a little bit in what you're doing, and maybe find a couple trades where you can make some money. But it's so much more to be profitable in this game depends so much more on what you're doing, your strategy, your risk management, than just trying to catch an option trade. I think really that's what gets lost on the tape. Is there is a huge amount of tweeting out active calls and Amazon and so forth, and very little attention. That, at the end of the day, like I said, is great for, like, catching some momentum and so forth, but doesn't really teach you much about being profitable. It just doesn't. It doesn't translate. And I think it's so much about positioning, especially if you're not just trading stock, but if you're also trading options. So that's what I try to teach, and try to help with every day, whether or not really I want to be taking a large amount of risk or scaling back on risk. It's very difficult to kind of, in my opinion, to change your direction, like day to day, to be like, today I'm bullish, the next day I'm bearish. Through experience, have not tried to do that. That's too difficult. I'm mainly, a pretty bullish person. But I'm aware when the risks are kind of stacking up a little bit, and I know to kind of trim and take off, positions into that, and this way you don't get caught up when the tape becomes more challenging. That's really the goal, and I think if you could do some of those things, you're that much far ahead of the game, rather than trying to flip flop every day or just day trade. I've talked about this before, that the majority of the moves happen in the overnight market. less during the day. So you really, why I talk about this is you want to capitalize on where the opportunities are, and then just be careful with, with Twitter and not getting caught up in the FOMO of trying to chase call buyers and so forth. So anyway, that's my quick couple minutes about just a little bit of strategy. But let's talk about what some of the things that I'm observing now for the day. So first of all, like I said in the morning, notice that we tried to go into value a couple times and got firmly rejected. Again, this is why I have the value areas on my screen. Just gives you a sense of where there's resistance, some things to worry about to the downside. When I sent out my note this morning talking about S&P levels, we were kind of caught in the middle of resistance as well as this VPOC down here. So lo and behold, the VPOC got taken out towards the end of the day. There was some rumors about things going on in Japan. Again, rumors. We don't know if what's going on over there, but that's why I said in the beginning of the video, there's a lot of things going on around the world right now. So that's why I think, making sure that you're really accounting for how much risk you're taking on a day-to-day basis is paramount right now. So that's the 5-minute S&P. One of the things that I also notice, I talk a lot about the advanced decline line. I use that a lot in my analysis to kind of confirm or if we're seeing any divergences. So the other thing with market breadth, by the way, you could see it was red all day long. Even though when the S&P was trying to go green on the day, market breadth wasn't. And you could, if I blow this up here, you could see that these lines, it just didn't, even here, right? We didn't see market breadth budge at all, which means there was very slim. The names that were advancing were like Amazon and so forth, but that's pretty slim breadth because there was a lot of sectors that just were not participating, even when at the highs of today. So that kind of told me a little bit of something about today. Again, you could still make, as we did in the trading room this morning. I made money in TTD. I made money. What else did I trade today? Kraft, which was kind of a lotto trade today, made some money in that. Made some small money in AMD today. TLT was a big trade that I had been talking about the last couple of days. I thought a good defensive way to, if you were worried about the tape, maybe to have on a little bit of long bond calls. Those worked very well. I got out of those this morning. I rolled some at the end of the day into March, but the February trade worked really well. Out for at $1.90 today. I probably in hindsight pushed it a little bit too much. Around 11:20, I put on a Lulu trade that did not work. I was trying to hit a target at 3:30. It never got there. It marked at 3:20, so I was being a little bit stubborn, and it didn't work. So I sometimes am guilty. I'm not perfect. I'm guilty of like pushing things a little bit too much. I was having a really nice day, and Lulu looked like a pretty good setup, which it still has to clear value for the month, which I put that on Twitter a little bit earlier. I won't rehash that. I also talked about a trade that I have on that's a loser. You have to, spend some time on the ones that don't work out. I'm long Sony calls. They're not working at all. Sony looks like, I don't need to show the chart because I already sent it out on private Twitter, but it doesn't look good. So it's a question of, what do you do with the calls that you have on? If you got in, I think my original price that I got in was, I think around $1.20, $1.30. Again, I just missed a target. I think at like $1.50 or $1.60, and now they're marking at 70 cents. So the question is, what do you do with this? Do you take it off and you lock in your loss? Usually, what I do is leave room to add, but I won't add in a name that looks like it's breaking down. There's plenty of time. It's March calls. I don't see the value in locking in the loser. A lot of times with options, my thought is only risk, because people ask like, "Hey, what's your stop price in options?" It's usually the premium. So if I get into something like this for Sony for $1.30, that's it. Like I'm only putting in what I'm willing to lose essentially. So if they go to zero, that's the stop price. So, so that helps with telling you, like, if you think about it in that, and why I've switched to that rather than trying to say, oh, I'm going to stop myself out at like down 50% or something like that. It really makes you think about how much in option, if you're trading options, how much you want to risk. If you take that, rather than so you may end up doing trading smaller size if that's the way you're doing things as well. All right, and then I unwound some things at the end of the day as well. But again, it's good to focus on the losers and how to manage them, and because everybody's going to have them. So I do spend more time on them. Now I could talk about the winners too. For the day, like I finished basically unched for the day, even though I had, which is kind of frustrating because I had about 3 trades that were winners. Like I said, maybe adding that Lulu was probably the wrong thing to do in hindsight. All right, so again, a lot of review that I'm doing here on, things that things that I traded. Also played a few things to the put side too, some cues. I just thought we had a chance to roll over for the day and basically wanted a hedge. All right, so I wanted to talk a little bit about the advanced decline line. I started talking about it and I stopped. But I went over this. I sent out a video right before the end of the day to members talking about this. So, what is this telling us? Let's bring up both. So, the advanced decline line did not make a new high, while price did. That is known as a divergence. And that's something I would say a little bit of a short-term warning signal for the market. So, what do I do when I see something like this? And again, you have to look at things in like not just one particular thing, but the whole context of the market and different indicators. But this is one indicator in a group of indicators that I look at. But it's kind of telling me that. I would be worried if this breaks the 50-day moving average again, but we just are not having strong breath right now in the market, and we've got smaller leadership right now in the market. Now that makes it harder to trade single stocks. If more stocks are moving down than moving up, what is that telling you? If you're a single stock trader, it's going to be that much harder to pick stocks, right? When the advanced decline line is moving up like this, everybody, I don't want to say everybody, but you have a higher probability of picking any stocks, right? So when people are talking about all this call buying on the tape, if market breadth is going up, almost all those, I shouldn't say almost all, but you have a higher probability chance that any of those trades are going to work. Because market breadth is super strong. You could pick anything. You could throw. Sorry to be, negative like this, but when market breadth is moving like this, you could throw darts at a dartboard, and pick stocks that way, right? Throwing darts essentially. I shouldn't say at a dartboard, but when market breadth is that strong, the stock picking, you really can do very well, right? Even if you're not a great stock picker. If market breadth is moving down, that's another situation, right? There's more names that are declining than advancing. So think about that in terms of the probability, and then also, I think the main thing there is the divergence. So the conclusion on that, how to act, is basically reduce some positions and be mindful of that happening in the short term. As I always say, that's not the right time to get over the tips of your skis in terms of risk taking. Right, one of my famous sayings. Okay, so that's what I think is kind of going to lead us into next week. So again, it doesn't mean like Amazon can't go up. It just means if you're, so I hope that makes sense. Amazon had a really nice day today. That is a position where I'm long in the tactical Tribeca Trade Group tactical portfolio. I'm now up over 12%, I believe, in that trade. So, and that's just stock. So let's move away from that. So that's kind of some things that we'll be focusing on in this weekend's newsletter, as well as different stocks that I think are pretty interesting. And then performance for the week. and then we'll end today's video. But I mean, again, forgetting about today, look at the 5-day performance of some of these groups of stocks. Solar, up 8.1%. Just thinking out loud a little bit, right? Everybody obviously Tesla was the talk of the week, but very interesting. Tesla obviously makes electric cars, which people think are a little bit better for the environment. Now, that's only one of the cases that people like Tesla, but solar performing really well and breaking out to a brand new high. Just I think kind of gives you a sense that people are a lot more focused on environmentally safe stocks. There's also a lot of socially responsible themes that are playing out as well, but really impressive. So this is an ETF that I'm long. We also saw a lot of call buying in solar names today. Not today, this week. ENPH, Run. Those names were from yesterday. What else performed pretty well this week? Biotech had a huge week. Again, this was pretty nice in terms of most of the week, and basically risk on from Monday till about Wednesday. And then I think breath started to kind of trail off as we saw, and especially obviously today. Gold miners, utilities, those were your underperformers. So again, kind of leads with that risk off. I can't believe this oil and gas basically flat for the week. Had an up 5% day and still ends up flat for the week. You could see that there was a decent amount of emerging markets. You could see emerging markets for the week outperformed developed markets, up 3% for the week. So South Korea was up 4.9%. Philippines, European financials were in there too, very strong. China was up 3.8%. And you have some of the frontier markets, I believe, that were down. Those were your worst performers for the week. And you can see FM right in there, down 1.3%, which has both UAE as well as KSA, Saudi Arabia, I believe, are both those in there. Greece was down 2.7%. All right, guys. So the video is 17 minutes long. I think that's enough on strategy and so forth. I could tell you, from my short-term account that I trade, which is both options and stocks in it, the adjustments that I made a couple weeks ago, scaling down, reducing positions, the number of positions that I'm holding, trading more stock than options. My P&L was basically right at 2020 highs, and I released that at the end of the month, and I'm up since the end of January to further. So, I continue to try to trade really smart in this market and trade where there's opportunities, and then try to really avoid the chop and so forth. And I could tell you with this divergence, I think I will let this play out a little bit, and no need to really take excessive risk here right now. Again, I flip flop if as the indicators change a little bit and the internals change and I'm seeing better opportunities, I flip my stance very quickly. But for now, that's how I feel going into the weekend. All right, guys, have a great weekend, and look forward to writing and sending out the weekend video with the member watch list included. Have a great weekend, everybody.